Corporate Finance Excel Practice Problem. In this presentation, we're going to work a practice problem in Excel related to the calculation of return on assets, total asset turnover, and profit margin. Get ready, because it's time to take a stance with corporate finance. Here we are in Excel. We have our information on the left-hand side. We're going to put that into the blue area on the right-hand side. We will once again be making a decision as to whether we should put an investment in place, focusing in on that return on investment. As to get to that return on investment, we will be looking at the return on assets and the total asset turnover. So we're imagining here, we're thinking about opening a new store. We're going to have to put down the initial investment in order to do so. The data we have then is we believe that the sales volume are going to be the 900,000. We have the profit margin percent, which once again will help us to get to that net income calculation. And then we have the total asset turnover per year. So the total asset turnover per year we're going to be using in order to figure out basically what our total assets are. And we want to get good at kind of going back and forth from using some of these ratios to think about how we can get to some other numbers in order to figure out our estimates. So we want to get pretty kind of agile with using these different types of ratios. So we need to be able to calculate them, therefore, straight out from top to bottom to calculate them, and as well as use them in calculations in relations with other type of other ratios for some estimates that we can be doing. Okay, so let's take a look at the total asset turnover. What we're going to need on the bottom line, if we think about this from the bottom to top, the end result we're looking for is the return on investment. The return on investment is calculated with the net income. That's what we're going to return. That's what our return will be, divided by the total assets or the investment, the initial investment we're going to be putting into the investment to get the return on investment. So then we're going to use a calculation in terms of the total asset turnover in order to think about what that initial investment will be. And then we'll think about the profit margin percent to think about what that net income will be. So let's go up to the total asset turnover. Now the total asset turnover is typically calculated or will be calculated as sales or revenue. Sales, which is going to be the 900,000. And then divided by the total assets, which we don't know. And then we're going to be getting to the total asset turnover, which we do know, which is going to be equal to that 1.85. So I'm going to be picking this up, home tab, numbers, let's add decimals here, 1.85. Now, when you see this in a book problem or in practice, then oftentimes when you're trying to back into that, I'm trying to figure out, okay, total assets, and they give me these two ratios already. What I wouldn't try to do, unless you understand these ratios quite well, is then to think about these calculations to in your mind to get to the item you need, which is the total asset, reformatting the format in algebra in your mind, right? Write it down the way this is calculated, and then look for the unknown. So in other words, they gave us this 1.58 total asset turnover. I'm going to write down the equation even though they gave us the answer so that I can back into the unknown. There must be an unknown in that equation, and then I can solve for it algebraically. When doing so, I'm going to list it vertically here because that's how I'm typically used to seeing it. I'm going to list it vertically if that's how I'm used to seeing it. Then I'll write it down algebraically, which would be the 900,000 divided by x is going to be equal to the 1.80. And then you can solve for it algebraically. So we're basically looking for this unknown. So I won't do the algebra for you. You can take that and write it down. And that's when a paper and pencil can actually be helpful. You could write it down and figure it out there. Obviously, it's not a complex calculation. But I want to also practice using the goal seek here. So because I think it's really useful in Excel when you are in more complex situations. That's under the data tab. I'm going to put something in this yellow cell. I'm going to go to the data tab, the forecast. I'm off that yellow cell right now. I'm going to say I want to goal seek with the what if analysis to the goal seek. And then I'd like to set this cell, this 1.85 to be what it needs to be, the 1.85. To do this, hold on a sec. I'm going to close this back out. I'm going to do a calculation here to do this. And that calculation, I'm going to delete this. Do the calculation it needs to be. This needs to be the 900 divided by the cell that has nothing in it right now, which means I get an error message. And now I can use the goal seek to trial and error into this cell. So once again, data tab, what if analysis, goal seek. And then I'm going to say, okay, I want this cell to be the 1.85 by changing this cell, and they're related, and it'll just do it by trial and error now. So it's just going to do it by trial. The formula must result. Hold on a second. Okay, it won't let me do it because it won't let me do it with an error, with a 0 in the numerator. So let's put a 1 here for now. Let's put a 100. Okay, now let's try it again. So we're going to go what if analysis, goal seek. We're going to say set this cell to be the 1.85 by changing this cell. And I have 100 in there. It's going to change it to whatever it needs to be. Okay, there it goes, finally. Okay, and there we have it. And then you can double check this, of course, by saying this equals the 900,000 divided by the 146,302. And then I'm going to go home tab, numbers, and add the decimals, and we get that 1.85 once again. So let's put an underline here, home tab, font group, underline. Let's put the double underline here, home tab, font group, and we'll do the double underline there. Then we're going to be picking up a profit margin. We're going to be picking up the net income using the profit margin percent. Now this one you probably want to have in your head to be able to go back and forwards from this. But if we do the same method and we look at the profit margin percent, it's calculated as net income and then sales. And that's going to give us the profit margin. And so we're going to say the net income is the unknown once again. I don't know the net income. We know the sales, which is going to be that 900,000. Profit margin percent, we know, is going to be that 9.5. So if I go to the home tab numbers, and then I make it a percent and add decimals, there's the 9.5. So then, of course, we know that the two unknowns are the things that are going to be used for the ROI. So when you have a book problem like this, this is what you often want to do. If they give us the information and they give us the end result of some calculations we are familiar with, quite possible you simply just want to look at the equation for those and then find the unknown, and then that's going to give you those unknowns, what you need to do to get to the end result calculation. That'll often be a format, but you want to get good at going back and forth through these calculations. So now we can back into the net income number here. We can back into the net income number. Now that I see it vertically, I can write it down algebraically, which would be X divided by sales, which is 900,000 equals the 0.095. And now if we were to do that, I'm going to do that with, I won't do the algebra here. I'm going to use the goal seek again, just to practice using the goal seek because I think it's useful in Excel. So I'm going to go to the data tab, forecast, drop down, and we want to use the goal seek. But one more time, let me delete the formula here. Now let's enter the formula. This equals this number divided by this number. And that's going to give us the 0%. So it's not an NA kind of thing. So it should work even though it's 0. So format tab, goal seek. And then we're going to say, I'd like you to change this cell to be what we know it should be, which is 0.095. That's because it's a percent. So 0.095 or 9.5%. And then we want you to do that by changing this cell. And then I'm going to say, okay. And then it's going to do the trial and error thing, and it finds the 85.5. All right, now we can calculate our return on investment because we got the return on investment. It's going to be the 85.5, and we've got the total assets that we're going to have to put in place, which is going to be the 486,302. So once again, this is what we expect to get after a year's worth of time. This is what we had to put into to do so. These are the assets that we put into place for the new store in order to hopefully generate the net income minus expenses of the 85. So now we can calculate our return on assets because you can think of it as assets in this case, which is the same calculation for a return on investment if you're thinking about any kind of situation where we are investing something, putting something down up front in order to receive a return in the future. So we're going to say this will equal the 85.5 divided by the 486,302. I'm going to then go up top, Home tab, numbers, make it a percent, and add some decimals. So there we have it. Now, once again, note that these things aren't, the percentages won't always be perfect. They may be in book problems, but you're going to have to deal with rounding. Rounding is just a factor of life when you're dealing with percentages. So you're going to get used to those in Excel. And that's why I keep on putting it into Excel and not pre-formatting the Excel tab for you, so that we can actually work on adding the percentage and seeing how many decimals and seeing that the thing isn't exact. Okay, so let's put some underlines here. I'm going to go to the Home tab font group. We're going to put an underline here. Let's put an underline here. Let's put a double underline here. Drop down double underline. Let's put a double underline here. So there we have it. Once again, is that 17.58 good for a return on investment? Well, it depends. That's just one factor, because we got to compare it to industry standards possibly, and or other places where we can put our money. Obviously, when we're thinking about a return on investment, if we're putting this money down, we could say, well, I could make 17 there, or 17 or 18% possibly there, but you got to weigh the risk factors and whatnot, and think about, well, is there some other place I could put it where I can get a higher return on investment as well? Just a couple questions that obviously you would be thinking about when considering an investment such as this. But if you had different options to line up, you could see how calculating the return on investment between 2 or 3 options would be one factor that would help you to kind of think about those decision-making processes, even when the initial investment may be different, right? You might have different investment amounts, and then calculate the ROI on different investments and the returns on those, and get a percentage return on investment. And that could be just one factor in thinking about where to invest.